do a lot of business, and most of it is not most of it. I'd say about a third of it is with investors. So this is pretty powerful.
I want you to talk about the biggest frustration with the 1031 exchange, right? You deal with a lot of investors. And by the way, some people are selling high-end primary homes in Washington, D.C., right? They've been there for many, many, many years, luxury homes, and don't qualify for the 1031. So what do you do? What do you do when they want to sell their luxury home for $5 or $10 million? They've lived there for 20 years. Their basis is $500,000. They got that 121 exclusion of $500 because they're married to the last 5 years. But above and beyond that, they're going to pay a huge capital gains tax. What's the frustration there, and what's typically your plan?
Well, I'm curious because I've never, and I mean, heck, we do like we're going to do 600 transactions this year. So we do a lot of business. But when you said 1031s with primary residence, my ears, I was like, okay, I need to learn what is this all about? Because, obviously we do 1031s all the time with rentals. I got a ton of 1031s we're doing right now. But yeah, I'm really curious. How do you do a primary residence 1031? Please.
Yeah. So first of all, you don't do a primary residence 1031 because 1031 doesn't qualify for primary homes, but you do something that's an alternative to that. And we like to give the analogy of Blockbuster versus Netflix, right? You remember going to Blockbuster on a Friday night 10 years ago, right? Maybe 15 now. It's actually going pretty fast now. And you want to get that movie, but then it's checked out, or you have 3 days to return it, and you don't rewind it, and you have to drive in the snow if it's winter in DC and all this craziness. Well, that's Blockbuster 1031. That's what we've been used to be doing, right? But now there's a thing called Netflix. We call it the Deferred Sales Trust. It's a separate tax code. It's IRC 453 versus IRC 1031, and it's an installment sale. So if Chris wanted to sell his big home right now, 4,500 square feet, and imagine doing it free and clear, imagine it was a $10 million house. You could sell it to Brett. I could give you $1 down payment and you could carry back the rest of it. You could, right? And that scenario, you're in what's called a tax deferral state. That's called an installment sale. You already know that's very common. Here's the cool thing. Here's where Netflix comes in, right? We form a third-party trust, okay, that actually buys it from you before we sell it to the ultimate buyer, because there's tons of buyers who are ready to buy houses right now. So we ask them to cash us out. And so there's 3 parties, and the funds end up at the trust. The buyer ends up with the property. You end up with a promissory note, but here's where the blue ocean opens up. The next day, you can invest it back into real estate, all tax deferred. The next day, you can put it to stocks, bonds, mutual funds. You can put it into hard money lending. We just did a Bitcoin case for a client. She sold a $5 million worth of $50 million of Bitcoin that she bought for about $30,000, and she's going to fund her next business venture. We did a deal in Alabama, $2.6 million sale. He sold the business. He's building 70 multifamily units in Tennessee. We did a primary home. Actually, you're like this. He was the #1 Keller Williams agent multiple times, probably the top one in the Silicon Valley over a 30-year period. Sold his house. He had never heard of this. He's like, this is crazy. CPA never heard of it. What do you mean? I've been the #1. I sell $100 million a year. Like, you're telling me you can do this thing? And I said, yeah. And he did it for his own house. And so the answer is, it's called not taking constructive receipt, having the funds go to the trust. We need to set this up before close of escrow. But it's been a couple thousand closes now, 25-year track record. I didn't know about it until I was at Marcus and Milltrap in 2008, and the market crashed. And I saw all the friends and family clients lose half, or some lost everything because they overpaid in the 1031. So yeah, we think it's the best kept secret. And for our listeners out there who are wondering how to learn more about this, you can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. And if you're a real estate professional listening to this, you can go to experttaxsecrets.com to learn how to implement this. But Chris, what are your thoughts on all that?
I mean, I'll tell you what, I'm typing it in my browser right now, so I can look at it a little later. That's incredible. I do a lot of business, and most of it is not most of it. I'd say about a third of it is with investors. So this is pretty powerful.
Awesome. Well, thanks for taking a peek at that and having some interest. By the way, our minimum is $1 million net proceeds, $1 million gain, for those who are wondering. So if it's a smaller deal, it doesn't work. Unless it's 2 or more properties, $500,000 each, then you qualify.